Hello and welcome to the Solutions Scoop. I'm Ravi Venkatraman.
And I'm Amanda Tepper. Ravi and I are co-founders of the Chestnut Solutions Institute, an independent forum dedicated to advancing the future of the investment solutions industry. Here at The Scoop, we examine the latest solutions marketplace developments and speak directly with solutions industry leaders. Our guests span the investment ecosystem, from OCIOs to asset owners, investment consultants, asset managers, and other key industry stakeholders.
These conversations are an important part of the Institute's mission to improve transparency and help establish standards and best practices across the solutions industry by educating asset owners, providers, and all other industry stakeholders. Let's get to today's scoop. Welcome to the Solutions Scoop, everyone. We have a terrific episode in store for you today. My guest today is Sona Menon from Morgan Stanley. Let me give you Sona's background briefly. Sona Menon is a managing director within Morgan Stanley Wealth Management's Global Investment Office. She serves as the head of the Outsourced Chief Investment Office, overseeing the endowment and foundation, retirement, Taft-Hartley, government, and ultra-high net worth segments. Sona also oversees the institutional product platform, which sources and accesses institutional managers for the OCIO business. In these capacities, she oversees over $145 billion in assets under management across the various client segments. Prior to this, Sona spent 24 years at Cambridge Associates as OCIO and partner, managing $25 billion of institutional assets. She was also the head of Cambridge Associates pension practice for North America. Sona holds a BA in Government International Relations from Cornell University and an MBA from Harvard Business School. She also serves on the board of the Association of Asian American Investment Managers and the Umeed Child Development Center and is on the President's Council for Cornell Women. Welcome to the show, Sona.
Thank you for having me, Ravi.
We are delighted to have you. Let's start at the top. How did you get into the investment business after an undergrad in government and international relations?
Yeah, that's actually a funny story. How I got into this profession is definitely not intentional and, in fact, possibly accidental. Actually, I had designs of wanting to be a physician. So I had spent my earlier career trying to be a bio major when I realized that maybe that's not exactly up my alley. So I really spent some time asking myself, what is it that I like? Because I didn't really know. And what I realized was that I did love global markets. I loved the concept of investing. I also liked sort of things that were dynamic, that were people-oriented, where I could meet different people, do different things, et cetera. So what I essentially did was I backward engineered jobs that offered me those types of opportunities. And so lo and behold, I ended up in JP Morgan's rotational training program, which gave me exactly that. It gave me exposure to financial markets, but it also, through the rotational training program, gave me an opportunity to rotate throughout different parts of the bank. And that was the type of variety I was looking for, as I was sort of shopping for my future career.
So you went back to grad school after that to get your MBA, right?
That's right. Yeah. And so after 4 years at JP Morgan, I went to Harvard Business School to, get a better foundation in management and business and operations. And then once again was thinking about what it is that I wanted to do after that. And there I sort of came upon something interesting. I thought, wouldn't it be great if I could marry my interest and skills in the global markets with my passion? And my passion was really on the nonprofit side. It was very important to me, if I could, to do a role somewhere where I could use my financial skills to do good for the world. And lo and behold, there was this opportunity at Cambridge Associates where I could manage money for endowments and foundations and help make these charitable organizations wealthier. So it felt like a really nice marriage of something that meant a lot to me, plus my skill set.
That's really interesting. I mean, that part of your career actually mirrors with mine. I went to Mercer, was also in consulting for quite a while before ultimately moving to money management. But
Uh-huh.
talk about what in your, you spent quite a bit of time at Cambridge. Sort of what did you learn there that set you up for this next phase in your career?
Yeah, well, I felt like most of the things that I know today, I owe to what I learned in Cambridge. And back in the day, in 2001, when I joined Cambridge, essentially we were doing a little bit of everything. There were no practice areas, there wasn't really OCIO in the way that it is today. Everybody did a little bit of everything. So I grew up managing or consulting to endowments, to foundations, to, colleges and universities, hospitals, pensions, a little bit of this and a little bit of that. And I also spent a stint of my time in the London office where I did very similar things, but for European clients and Middle Eastern clients and UK clients. So again, that gave me sort of the breadth of understanding how to manage assets for different types of asset pools and to work with, different types of committees and boards and, navigate that job with different stakeholders.
That's great, Johnny. You and I have been friends for a while, but that bit about the stint in England I missed. So
Oh,
that's interesting. How long did you spend in London?
3 years actually.
Yeah.
And it was great. It was, it gave me a really great vantage point about investing because it felt to me like, European clients were very different and Middle Eastern clients were even more different. And it just broadened my aperture in being an investor.
Okay. So bring you up to date now. Obviously, you had a great career at Cambridge, learned the OCIO business there. What attracted you to Morgan Stanley?
Yeah. Well, I mean, first I'll say this, just one last bit about Cambridge that I think is worth noting is that I was serving as an outsourced CIO at Cambridge Associates for the last almost 20 years. I mean, I started right before the global financial crisis with my first few discretionary clients. And, that was fantastic opportunity. And I spent I spent basically all my time being an investor. But towards the last 10 years at Cambridge Associates, I also had a leadership role where I was managing the North American pension business. So that helped me build a different muscle, if you will. I focused on talent management and growth strategy and business development, all things that are not investment related, but it really just broadened my skill set as a leader in the space. So, fast forward, I felt that really very adequately prepared me for this opportunity that came about at Morgan Stanley, which was to take everything that I had learned as an investor over the years and as a business leader and put it together to head up the entire business, outsourced CIO business at Morgan Stanley. But to answer your question, why, I would say, the first of it was impact. And as you know, I told you earlier that the first reason I ever went to Cambridge Associates out of business school was because I wanted to make impact through my financial skills on an organization to help them do better, more giving, a more charitable work, et cetera. So it's sort of mission based. But at this stage in my career, I felt like, I was sitting inside of one business, in pensions at Cambridge Associates. But this opportunity allowed me to really lead all the segments. And, so that ability to have a broader impact in an organization was incredibly exciting. That coupled with the fact that the business was growing so much, and I'm sure we'll talk a little bit more about the growth of the business at Morgan Stanley, but that business was growing so much that the firm had, made a visible commitment to adding more resources to continue that growth. And so it felt like a fantastic time to come and join that.
Great. So let's talk about growth. I mean, obviously you're in a space, OCIO, we all are, that's growing very rapidly globally, both across markets, but also across client segments. Can you talk a little bit about how the Morgan Stanley business has grown?
Yeah. So, I mean, when I came in here pretty much exactly a year ago, I took some time to understand the growth drivers and the growth trajectory. And what I learned was that over the last 3 years, Morgan Stanley's outsourced CIO business has been growing at more than 30% CAGR. So that's a pretty, healthy figure. And what's also interesting is that it's grown double digits inside of each of the segments that we have. So it's not that the growth was coming from one place and not another. It was really growing fairly uniformly across all three segments. And, I tried to understand what was driving that growth. And it was fairly clear. It is the financial advisor-led model at Morgan Stanley, which I think is the key driver of growth. So I don't know how familiar you are with that, but essentially Morgan Stanley has in wealth management about 16,000 financial advisor teams. Now, these teams have long-standing trusted relationships with their clients, obviously. But those clients could be the CFO of a corporation, or they could be sitting on the board of a college or university, or, be an entrepreneur who essentially has monetized their companies and essentially inherited the wealth. So, they became the referral source for the opportunities because of the relationships they already have. And then when they find that it's appropriate for OCIO to be a partner for them, as in, let's say that the portfolio would be larger than 50 million, that the institution or the asset owner is looking for discretion, then they would bring us in to partner with them. And so it's sort of a beautiful thing where you have essentially automatic sales force built into the wealth management platform. And, they are great partners to us, and we work with them effectively and serve as their investment engine from the home office.
Okay. I want to ask you a question that goes between the lines here, because obviously coming from Cambridge, you were the chief business developer, chief investment officer, chief client service officer, right? To your book of business, that's the way it works. You just described a very different dynamic, which is this powerhouse financial advisor community. What have you found to be, other than that, in terms of communication or dealing with this different investment community, that is new to you, which is, maybe exciting or challenging stuff you're getting your arms around?
Yeah, that's a great question. And you kind of nailed it in the beginning when you said it's so different from anything I'd ever experienced, where I did basically all of it. And I can tell you that having done sort of business development, it's a tough thing to do, to sort of pound the pavement and look for growth and to develop relationships from scratch, right? And so I found that in my role at Cambridge towards the end, I was spending a significant amount of time doing that. And if you ask me if that's my core competency, it's actually not. My core competency is as an investor. And of course, my core competency is to help close business, but it's certainly not to sort of, manufacture an opportunity per se. And so for me, it was sort of a beautiful thing when I realized that actually naturally happens elsewhere here because of these trusted relationships that the financial advisors have built. And, they have, deep expertise. Some of them are specialized so that they have expertise in endowments and foundations. Others may have expertise with retirement plans, et cetera. So it's great that they have gotten the ball rolling essentially. And then they sort of invite us in to partner with them if and when, that's appropriate. So, we sit down and try to understand what it is that they're solving for, the financial advisor, and then we help them. So I, in a way, think of the financial advisor as my client as well. And they're sort of my internal client, and then the asset owner is my external client. And so really it's just working with one more client.
And that division is called Greystone, right? The financial advisor group?
So let me clarify that actually. So the 16,000 financial advisors I spoke of, some of them have specialized designation. So Greystone is one very large specialized designation of financial advisors who have developed, a deep expertise with, endowments and foundations, investing and retirement. And so they have been managing as fiduciaries or consultants assets for these types of institutions for many, many years. Greystone is one such designation. Another one is the Fiduciary Consulting Group, which is essentially a conglomerate of several acquisitions that Morgan Stanley has made of financial advisors. And so those folks essentially have very close relationships to the ultimate asset owner. But oftentimes they think that it would be beneficial to the end client to bring in outsourced CIO services. And so that's when they work with us. So we're really partners. And I know that often there's confusion because when people might hear Greystone sometimes they hear Morgan Stanley, but we're really one and the same.
Okay. So I remember when I was at Mercer and we started this OCIO business, the investment consultant role vis-a-vis the OCIO role, there was some adjustment, sort of who does what. You're delivering seamlessly to the client, but behind the scenes, there's some delineation of responsibilities and some evolution in that. Can you talk about how that dynamic works in the financial advisor distribution-led model? Perhaps they were doing everything for their client, right? And now there's the OCIO office, you. So
Yep,
what do they do and how does that evolve?
Yeah, absolutely. So like I said, it's very much a partnership model. They're first and foremost sourcing the opportunity. And for that, I'm incredibly grateful. And secondly, they're really the front face of the relationship. They are the ones who have the very high touch interaction with the client all the time. And we are in the background, sort of the investor, right? The people building the portfolio, the people building the investment strategy, finding the investments to put in the portfolio, overseeing those investments, doing the middle and back office work, et cetera. So essentially, they are leveraging the services of the Outsourced Chief Investment Office so that they are, more scaled in the work that they do. But they are absolutely in the front line of that relationship. So I'll give you an example. On a quarterly basis, when you have, quarterly committee meetings, those meetings are very much, run by them. And they are at that meeting, but so are we. And so we're there to give sort of the update on what's happening in the portfolio and, why things are the way they are. We'll give our markets views, but, they will essentially, be first and front in that conversation. And then I would always also say that if an institution, if a client had a question, they're the first phone call. And that, in my world is different to what I was used to at Cambridge Associates, where the OCIO was the only call. And over here, they're doing really all the client service and relationship management part of things.
And so you say you're at the table as well to really talk about the investments. So I know this is a little micro, but I think the audience will be interested. So who goes to that? Is it a designated portfolio manager from your team, or are there different subject matter experts that rotate through meetings?
Yeah, great question. I should definitely bring that to life a little bit. So our outsourced CIO office is roughly 60 people. We have about 40 PMs, and they're divided into their respective segments. So as I mentioned earlier, we serve 3 different segments. The retirement segment, all things retirement, defined benefit plans, DC plans, Taft-Hartley government entities or public plans. We have insurance clients, et cetera. That's all served under the retirement business. And we have PMs that are subject matter experts. So for example, we have subsegment specialists. So we have Taft-Hartley specialists. We have a DC specialist. We have a DB specialist PM. So, and similarly, I would say that in endowments and foundations, we have subspecialties as well. So we have somebody who is looking at colleges and universities, somebody who's doing healthcare, somebody who's doing private foundations, et cetera. And in ultra high net worth, we have focused sort of more on US clients and then international clients. And so that's a long way of saying we have PMs who are subject matter experts, and they are assigned a number of relationships that they manage alongside with the financial advisor team. So it is they who go to that meeting with the financial advisor.
Gotcha. Okay, so let's actually get into those client segments. I think you've mentioned a few segments already, but let's just kind of go back over what are Morgan Stanley's core client segments in this, in the OCIO business. And then I'd love to get into what you're seeing as trends in these segments.
Yeah, absolutely. So as I said, 3 segments are, that's how we're divided. And of course, within them, we have subspecialties. The retirement segment is a conglomeration of defined benefit, corporate defined benefit plans, DC plans, Taft-Hartley plans, and public plans. And we also put our insurance clients inside of our retirement business. It's not yet a subsegment, but it will be, later this year.
Yeah, and it's a growing part of the business, yeah.
And then, similarly, as I mentioned, in endowments and foundations, there are so many different types of client types in there, in terms of community foundations and private foundations and colleges and universities and healthcare. We also do our nuclear decommissioning trust clients under that business because, it's effectively a total return type of a portfolio.
Okay. So in the retirement space, let's talk about DB, your old stomping grounds. Is it business as usual there? I mean, what's happening currently given where the markets are, where the rates have been, and the plans did become much better funded? Is anything new on the horizon?
Yeah, plans have been better funded. And so we are helping many of the plans de-risk and, build larger liability hedging portfolios. And once you're in sort of de-risking phase, obviously you're not focused so much on generating alpha and returns, but rather protecting your funded status. And so we really help them take their fixed income portfolio to another level, right? And so whether that means adding specialized investments there and doing more bespoke hedging over there, et cetera, we're doing those types of things for those types of clients. Also, sometimes clients want to engage in conversations around pension risk transfer, et cetera. And because we have deep subject matter experts and even actuaries on our team, we're able to help them understand, the pros and cons of going down a certain path or not.
Gotcha. In the DC world, so OCIO services in the DC world, a newer thing. And not everybody's doing that,
That's
but
right.
it is growing. What does that mean to Morgan Stanley? How are your services packaged in the DC world?
Yeah, and you're totally right to say what you did because OCIO or discretion in the DC world is a relatively new thing. I think, there's an interesting statistic worth sharing. Those who are doing discretion, the plan sponsors that are doing discretion on their DC plan, 80% of those have been doing it just in the last 5 years. So it's such a new thing. And so, what are we doing? Well, first and foremost, we're there because we have the subject matter experts. We're there as an educator. We're there to help them understand the regulatory landscape and help them with their plan design and plan selection and help them essentially execute that portfolio. Then we can help them also with identifying the best vehicles to invest in. As you know, the DC space is very focused on fees. And so we are able to try to, innovate and try to build vehicles that have, lower fees for our clients. And that becomes a really important pull in the direction of, DC discretion. So we've been working, I would say, I would answer the question like this. We have been figuring out where the gaps are and pushing to innovate and build structures that enable the DC plans to participate, whether it's, retirement income or whether, it's the democratization of alts and that's obviously where the world is headed. And so, we're there trying to understand what the needs are and how we can help.
Okay. And maybe final stop on client segments with nonprofits, as we know, they were early adopters of the discretionary outsource phenomena, but it's a huge market segment and continues to be very rapidly growing. And we've got a lot of good market data at Chestnut based on our latest survey on this. But what services maybe you could talk about that you offer that are sort of not obvious that you would think, like maybe investment and non-investment?
Yeah. Yeah, no, that's a great question. And this is also something that I've come to learn a lot about in my first year at Morgan Stanley, that, again, the platform here is so large and so vast that we have so many ways within wealth management to help a client do what it is that they want to do. And it goes beyond investing, as you rightly said. So, for example, I'll give you a perfect example. There's one new client that we have who is actually starting a foundation. It's their first foray into building a foundation with their family assets. And so they know that they want to do it. They don't know all the things that they have to do it. And they need a lot of resources related to that are non-investment related. And, how does it work? And what do you do when you have a lot of wealth? And what are the different, levers you can pull? And so we have, again, other partners within Morgan Stanley who do just this, who know how to work with wealthy families who want to do charitable giving and how to think about building a foundation and what are the key things to ask. So we know, and we can partner them up with those folks to help them. And so it very quickly becomes a much more full scale service that we can provide. And that's very, very typical.
That's such a good example of, the full suite of capabilities. I mean, when you see RFPs and things like that, or clients that are contemplating this for the first time, often they think of investments, which obviously we'll get to, which is the core of your proposition. But there's so much more that a firm like yours could bring to the table. And I know we're constantly trying to shed some light on that. Let's move on. Speaking of investments, because I know this is your bread and butter, let's talk a little bit about the investment philosophy. Could you characterize the investment philosophy at Morgan Stanley in any particular way? How would you describe it?
Well, I would say that, our process is very much anchored in understanding the cash flow needs and objectives of an asset owner, whether it's a pension plan, where we want to intimately understand their particular, stage for their plan, what it is that they're trying to achieve, understand their unique liability, and then build an investment strategy that reflects that. In the endowment and foundation space, it looks slightly different, but similar. Again, we want to understand what your spending needs are, what constraints you have, what your longer, broader, ultimate vision is, and build a portfolio that very much reflects that. And then in the ultra high net worth space, I would take it, very similarly and say that there's a significant amount of planning, both tax planning and, future planning that goes into building a taxable portfolio for those clients. So I would say that our investment philosophy and process is very much grounded in understanding the specifics of the asset owner and what they're solving for, whether it's taxes, or whether it's, liabilities, or whether it's just long-term appreciation of assets, and then building a very bespoke, very customized asset allocation strategy to reflect that. That's where it begins. And then comes the portfolio construction, right? And even portfolio construction is customized to the sense, and by that, I mean, we don't have model portfolios. We don't have templates.
I was just about to ask you that.
we don't have sort of a, low, medium, high. It is very bespoke in what the portfolio looks like. It doesn't mean that the processes we go through are bespoke. Of course, those are more standardized, and portfolio construction is what portfolio construction is. But there are, when we get to know an asset owner, and let's say you have, a private foundation, and you understand that they're very focused on building an alternative assets portfolio, right? And that they really want to generate their returns from there. They want all their focus and risk budget over there. Then that in your portfolio construction, you may, utilize your public equities and fixed income portfolio will have to work a lot less hard, because the alternative assets are really going to do the driving of the, And so we would build a portfolio that takes into account where it is that we want to generate most of the alpha for the client. Although we want to generate the alpha everywhere, we want to understand what that particular need is that we're solving for. I would also say that liquidity becomes really important in a conversation. If we know that endowment is spending at 8% versus at 5%, we have to think about what that looks like in the rendering of the various, asset class portfolio construction is. So, it looks really, really different and customized in how we build the portfolio construction of each of the portfolios. But again, the steps that we go through are, obviously standard and typical. And then finally, it all ends up in what investments you choose, right? What are the investments that we're choosing in the portfolio? Those are very much driven, obviously, by the segment-specific needs. Obviously, we have very specific needs in retirement than we do in ultra-high net worth, where tax is a prime focus. And then, endowments and foundations, it's very different too. There's a different element there too, which is size. If you are 50 million in assets, which is our minimum, or if you're 500 million in assets, or if you're 2 billion in assets, you are going to participate in potentially very different investments. And, one thing that I think is also very interesting about how we deliver that is our institutional product platform. And that is essentially an opportunity for us to identify and source very interesting institutional ideas, institutional manager and strategies that would go into larger portfolios that would want more specialized niche ideas that, maybe a smaller portfolio probably can't take. And so there's a large effort that we focus on in trying to identify these institutional type investments. And when I say institutional, I don't mean to say that they're only for institutions. I mean institutional in the sense that they are different from the, broad platform of ideas that, a retail investor might invest in. And all this is relevant because we sit inside of Morgan Stanley's wealth management division, right? So It becomes very, very relevant to think about who your end consumer is.
So you have your own research team. I take it I'm talking about manager research now. We were just talking about how you source new institutional type ideas, etc. Talk a little bit about your research team. How do managers get on that? Do you go ask them? Do you kind of create new strategies with managers? Or how does one get on your radar, if you will?
Yeah, great question. So I would clarify and say that we don't have our own research team. We have a very strong research platform that is centrally utilized for, all of wealth management.
Okay.
And we leverage that same research platform. Why change something that works so well, right? They have tried and trusted and very rigorous process of evaluating managers. And, I spent a lot of time doing that, in my prior life and working with people who did that. So I know the rigor that is behind the research work. So we leverage the research process and engine that already exists. However, we have specialists inside of the outsourced CIO business who collaborate with the research folks to essentially get the ideas that we want diligence that are more institutional. And they differ from the sort of broader platform of ideas that Morgan Stanley has that may be more appropriate for the retail platform. These ideas that I'm speaking of may have, higher minimums. They may have a $5 million minimum. They may be much more specialized and niche, so not appropriate for, average person's consumption, may have more, risk associated with it, et cetera. And that wouldn't be appropriate for a smaller client, but for an institutional client, a client with more than 50 million in assets, it would be appropriate, if not, required.
Yeah. So I know there are parts of our audience that are really interested in this. Does that centralized research team express its conviction through a rating or an opinion to you folks, internal stakeholders? And also maybe if you can touch on the bit where you said you've got some ideas and you enlist the help of the research team to check that out and do due diligence. So if there were great strategies out there, should they be talking to your research team or your portfolio management team or something else?
Yeah. So there is let me start at the top. There is sort of the broad universe of, approved investments that we have in our portfolio. And from that broader, and by the way, to be approved, obviously you're going through a fairly large funnel and obviously not everything gets approved and it's only the things that essentially meet muster. But, but to that point, Morgan Stanley is such a large platform that we have a lot of strategies on our broad platform. Then we sort of take the subsection of those strategies and have a more focused list of strategies that's appropriate for larger clients, right? So if you think of the average retail client as being $5 or $10 million in net worth, an institutional client here, as I said, starts at 50 million. And they would want to look at different opportunities because they are able to look at a different opportunity set. And so there is a smaller list, a more focused list of opportunities that we look at for those. And then to sort of answer your final question, I have some ideas, and we have a team that we call Institutional Portfolio Solutions. Their job is essentially to identify institutional strategies for our platform. And so how do we do that? We do that because, well, we identify a need. So, based on where markets are, there are certain needs. Some things become more attractive. For example, after 2022, when hedge funds did such a great job in preserving capital for clients, hedge funds all of a sudden became much more interesting and appealing for client portfolios when, they wax and wane in popularity, as you know. And so we tried to build up, our arsenal of really great hedge fund strategies and sub-strategies, et cetera. And so that was a need that we identified. And then we went out and sought sort of the best in class long-short managers, or the best in class, multi-strat managers, or et cetera, et cetera. So sometimes it's need-based and sort of, opportunity-based. Then it's also, we see managers in a new client's portfolio, right? And so when we inherit a new portfolio of a client that we've just won, we look through it, and sometimes we don't have all those managers on our platform. And it behooves us as the fiduciary to learn what those strategies are about. In some cases, we don't like the strategies. And in some cases, we think, wow, this is a great idea, an opportunity that we didn't come across. So we build relationships. And then also along the way, we meet managers. We are going to industry events and we meet great managers that are coming up. And sometimes a manager spins out into a different manager, and, we're in touch with them, and they come and talk to us. And then we determine whether it's a valid opportunity. And if we do determine it's a valid opportunity, then we ask our research team to take a look. So then the research team will take a look. And then, of course, they could say yay or they could say nay. But, at least, the conversation has started.
Gotcha. Let's talk a little bit about, the growing phenomena of alts. What does Morgan Stanley offer? How do you think about alternatives that go into client portfolios? And I'm also interested, sort of your topical take. Now it seems, private debt has become very popular, but we're starting to see some headlines about that more recently. Perhaps there's some headwinds, et cetera. So let's start more on a strategic note, how you think about alts.
Well, my personal take on alts, given where I came from and sort of grew up at Cambridge Associates, it's that they can be incredibly, incredibly additive to a portfolio. And so it's no surprise that, I joined an organization that happens to agree with that. In fact, Morgan Stanley is, I think, the largest, investor of alts on Wall Street. And so we have a significant amount of essentially products that we are engaging with and looking at for our clients. And as I mentioned earlier, some of them are more appropriate for the broad investment channel, so the broad platform, and some of them are more appropriate for the institutional channel. I will tell you, though, that one of the reasons, the second major driver of our OCIO business growth, in addition to our financial advisor-led model, is essentially our ability to build alts portfolios for our clients. Okay. And, a lot, the performance that private equity has generated for large institutional portfolios over the last few decades. It's fantastic. You get paid back for the illiquidity that you take on, assuming you're in the right funds. And now, even institutional asset owners that are in the 50 million range want to be part of that too. They want an alternative assets portfolio, whether that looks like private market funds, private equity venture, or hedge funds, or private credit, which we can touch on, or real estate, or, now infrastructure is really interesting as well. So, these are all things that we are very focused on sourcing for our client portfolios and spend a significant amount of resources. And so I have personally got resources in my business that supports that. And we are essentially identifying opportunities that are exclusively for the OCIO channel and for our other large institutional clients that may be, again, Greystone, that may not be discretion, but still large institutional clients, our family office business, which also has large clients. And so those clients, again, can play in a different field. And so some of these opportunities that we're sourcing are exclusive just for these channels.
On that point, what would you say to potential skeptics that say there's so much capacity or demand now that's increasing if you democratize access to alts? Can everybody access the best investment managers? What does Morgan Stanley do differently?
Well, there's a huge range. As you know, alternative assets is a complex space. It's a huge space. It's an expensive space. It's a difficult to understand space. And so, it's really important. I think the success lies in the execution, and so does the failure if it's not executed well, right? My view on the whole democratization is that, if I use myself as an investor, right, I don't have $100 million foundation, and so I'm going to be investing. If I want to invest in private equity funds, they will be the larger ones, right? They will be the ones that have the capacity to take on, a lot of clients, that they're using Morgan Stanley as a distribution channel. And, it's a marriage that works on both sides. And actually all three sides, for Morgan Stanley, for the GP, and then for the investor, like in this case, me. And so it gives me an opportunity to participate in investing in funds that I otherwise may not have had 10 years ago. But I think that for larger clients, they're looking at a different subset of those opportunities that are much more specialized. So while I could invest in a generic, private credit manager, for my personal account, I probably don't have the capacity to invest in, say, specialized private credit like Asian private credit, right? And so that may be more appropriate for an institutional channel and, sort of more esoteric type strategies, more specialized strategies that may have a shorter track record, for example, and that could be access constrained, where in this case, these managers aren't looking for a distribution channel as much as we're looking to get in with that. Do you know what I mean?
Yep. Yep. Great. So you're coming up on a year, right? There at Morgan Stanley?
Next week, actually.
Oh, wow. Time flies. And you must be getting involved or have been involved in pitches now, and then reflecting on, what you go to market with now versus maybe, your pitches in a prior life, or maybe even more broader than that. What do you think the key differentiators are at Morgan Stanley? Why do people come to Morgan Stanley when they want, fiduciary or discretionary management?
Yeah. And you're right. I have now had the opportunity to sit through a lot of pitches across the different segments. And I get to see how my colleagues talk about Morgan Stanley. And, it's been a great learning experience for me as well. Look, I think Morgan Stanley OCIO is good at a lot of things. We can say in the marketplace that we're proud to build very customized portfolios, as the way I described to you, that we're proud that we have a really robust platform and that we have access to very specialized investments. But I would tell you, ultimately, what I think is the secret sauce is that Morgan Stanley offers a platform that has scale and full service. So it's incredibly large and well-resourced, but it's delivered through the high-touch relationship of a financial advisor. So it's a little bit of the best of the both worlds, right? You get the high-touch client service that everybody so wants. I pick up the phone and somebody's there on the other side, and it's that same person every single time. But at the same time, you get to leverage a very large, tried and trusted platform of, an investment process, of a technology platform and investment ideas that, you want to participate in. And I think that marriage is what brings people to Morgan Stanley.
Okay, great. Let's turn to now on your 1-year anniversary. What is Sona working on? I'm sure you were brought in to bring some new ideas to the table, to strengthen your market share, which, by the way, I should say for the audience, Morgan Stanley is number one in terms of market leader for US in discretionary OCIO assets under management, and feature prominently in Chestnut's recent Market Leader Awards that we just published. So congratulations on that. But maybe you could talk a little bit about what you're thinking of for growing the business, maybe strengthening it, etc.
Yeah, a lot of things, I would say. And so thank you for asking. I've been here long enough to see what we're very, very good at. And I have a vision for the future that helps me think about how we're going to be and stay great. And so, as I mentioned to you, we are growing at some 30% CAGR, which is a very large number. And so what does that mean to me? It means I need to grow my talent pool to keep up with this. So that's part one. And I can talk about that in a minute. And then I need to make sure that we are delivering our service in the most efficient and scalable manner, right? And so what worked maybe 5 years ago when we were maybe 50 billion in A to today when we're 145, it's a different recipe for success. And so there's a few things that I'm focused on. One is we are growing the team. So you probably see on LinkedIn that I'm kind of always hiring. We're trying to grow our institutional product platform team, because again, the sort of the interest and the throughput on alternative assets and institutional ideas is so huge that I need more people doing that work. We are also growing in our ultra high net worth team. In fact, have almost nearly doubled in size in a year, because we are seeing so much interest in international clients, those who live abroad but want to build a US-based portfolio. They need very deep expertise, language skills, et cetera. And so I've grown the team there in that respect. And as I've mentioned, we're growing our insurance business as well. So along all parts of our segments, there's some growth that we're focused on. So I've spent a lot of this time, and will probably spend 2026 doing some talent finding. Secondly, we are just trying to grow our plate of, institutional ideas and differentiated ideas. I say the word institutional, and I recognize that it could be misleading because it makes people think institutions. But even, our ultra high net worth business, those private clients of ours, they want niche ideas in their portfolio. They want to invest in that really interesting long short credit fund that may generate, great performance in their portfolio. So we are spending a lot more time trying to understand where the gaps are of the products and strategies and even vehicles that we want. And we're trying to add to that. So that's a second thing that we're doing. And then thirdly, I would say we're moving up market in size. So we're seeing bigger and bigger opportunities, not just 50 million, but 500 million and several billion. But we've also noticed that in the last couple of years, there are asset owners, whether they're, tax exempt or taxable, that are in that 25 to 50 million size that have said, why can't I have OCIO? And so we are in the midst of creating a solution for that market that's just underneath our typical market. And I'm happy to say that this year, in fact, this month, we have just launched our ultra high net worth OCIO solution for 25 to 50 million. And, it sort of helps us broaden our target market and serve an audience that is looking for discretion in a way that's scalable.
So may I ask there, just curious, whether that solution sort of technology based, are these separate accounts, these big portfolios, like a UMA type platform, or are you using a whole series of vehicles where you mix and match, where you can have retail investors go into any of them?
Yeah, so it's sleeve based. So,
Okay.
unlike your typical OCIO platform where, we build separate portfolios for each,
Yeah.
asset owner, this is going to be sleeve based. But there is a technology component to this for sure, but it's engineered in such a way that we can customize the asset allocation, but deliver it in a scalable way. So, someone who wants to invest in much more US-based, public equity, and others who want to do more global can do all that. And then the sleeves are essentially made up at the asset class level that you can participate in. So this is new for us, and it's very exciting because I think that we can deliver OCIO in a much more scalable way, and the ultimate client gets all the bells and whistles and governance and processes of OCIO. They get also institutional managers at institutional pricing, which is pretty amazing, right? Because usually you get institutional managers at retail pricing, which is quite different. And this is different. It's better. And so my vision and hope someday, as I say this out loud, is, once we can make this work successfully for the ultra high net worth space, I don't see why we couldn't, do this for endowments and foundations, et cetera, because, I get phone calls from, financial advisors all the time saying, I have a great opportunity. It's just not 50, it's like 30. And I'd love to say, yes, we have a solution. And so I hope we'll get there.
That's great. That's terrific. I mean, sounds like you're off to a fantastic, well, more than a start. You've been there a year. You've got a lot of plans and a lot of momentum as well. Any last parting words of wisdom from Sona or any thoughts?
Nope. Just to say thank you so much for giving me the opportunity to talk a little bit about what we do and how I approach things. And I'm so glad that we've been friends for so long.
Yeah, absolutely. Likewise, it's been a real pleasure having you on the show, Sona, and also being such engaged members of our Chestnut Solutions Institute. Look forward to continuing to work with you guys and also continue to be friends for a long time. Thanks again.
Of course. Thank you so much for having me.
Take care. Bye. Chestnut Advisory Group is a boutique, practitioner-led management consulting firm dedicated to asset managers and investment solutions providers. In addition to the Chestnut Solutions Institute, our advisory practice areas include distribution strategy, M&A support, go-to-market, and implementation and coaching services. This podcast is owned and produced by the Chestnut Solutions Institute. If you like this content and would like to access more insights, webinars, and podcasts, please check out our website, chestnutadvisory.com.